Hey, it's Matt Decker with Leverage Wealth Management coming at you here with a product review. This one has been a long time in the making because I frequently get questions about this particular product on my YouTube channel, randomly in my email. Sometimes I'm not quite sure how people find me, but they do. And a lot of times they ask me about this product. So this isn't going to take very long, and I think you'll see why. It's because I don't have a ton of good things to say. In fact, I have no good things to say about this particular product. So I'm just going to highlight the things that I find concerning, and we're just going to leave it at that. So this is the Transamerica Indexed Universal Life Review. Now, this is, I would say, a relatively unbiased review. I'm licensed and able to sell Transamerica, and I choose not to for several reasons. And let's just go ahead and get into some of those right off the bat. So the first thing that I want to key in on are the actual policy fees as it relates to the Transamerica Indexed Universal Life. The first thing that I want to key in on, and really you can listen to this kind of bullet point and you can stop the video after this if you want to, because Transamerica is one of three companies. Now I'm recording this at the end of 2018. So if you're watching this in the future, things might have changed. But as of right now, they're one of three companies to have ever increased their fees on their universal life insurance policies. To me, this is the absolute biggest red flag that could possibly exist when you're purchasing a universal life insurance contract. If a carrier has ever increased their actual cost of insurance charges, I'm not talking about rider charges, I'm not talking about things like long-term care charges, I'm talking about cost of insurance as it relates to a universal life insurance contract. They're one of three, and I would stay away from all three of those companies. Transamerica happens to be one of them. In the same vein, they have a specific charge on their most popular policy that I just absolutely hate. Okay, and it's called an indexed account monthly charge. This fee is ongoing. It lasts forever until the client turns 121 years old, and it just so happens to be one of the most expensive individual charges in the entire industry. Now, I'm not talking about just the idea of this index account monthly charge. I'm talking about the actual charge that Transamerica has on their most popular product. It's called an indexed account monthly charge. It is one of the most expensive charges on any universal life insurance contract in the entire industry, and it lasts for the life of the contract. I hate that about the product. The next thing that I really don't like about this Transamerica Index Universal Life are their loan provisions. Most index universal life insurance policies have several loan provisions that give you the flexibility to determine exactly how you want to utilize your policy. And that's really helpful because not everybody has the exact same objective with their policy. So flexibility is huge. Well, Transamerica has virtually no flexibility when it comes to their loan provisions. They only provide to you fixed loans. And what I did is I went ahead and I copy and pasted their loan provisions from their policy. It's in quotes here on the screen, and I'll read it to you. The maximum loan interest rate on an outstanding loan balance is 3%, with a maximum preferred rate of 2.25%. So stop right there. You might say those charges are different, so there's more than one option. Well, not really. It's the same option. What they charge you to access your money changes based on when you access it. And that's actually pretty standard for just about every indexed universal life insurance policy that's out there. Typically, the time frame is inside the first 10 years, they're going to charge you, in this case, 3. After the first 10 years, they're going to charge you, in this case, 2.25. So they reward the people that stick around longer. That is standard. Charged in arrears. The preferred interest rate is charged on amounts in excess of premiums paid, less withdrawals and outstanding loans, including interest. Preferred rates are available after the 10th policy year, like I just said. Okay, so the upshot there is as soon as you take a loan on this particular policy, the money that you've loaned yourself stops earning interest. It stops earning interest because what they're going to do is they're going to charge you, let's say inside the first 10 years, they're going to charge you 3%, and you're going to earn, let's say, 2.25%. So that's negative. You're actually losing money in that scenario. 75 basis points a year is a cost to you because they're charging you 3, you're earning 2.25. After the first 10 policy years, the loan automatically becomes what's called a wash loan, meaning they charge you 2.25% and they credit you 2.25%. 2.25%, 2.25%, nets out to zero. So as soon as you start taking loans on this policy, you stop earning interest on that money. That's not to say that that's necessarily a bad thing. Some people love these loans. The problem here is that you have no other options. There is no flexibility. There are better loan provisions that actually allow you to loan the money to yourself while you continue to earn interest on it. So having that added flexibility is huge, in my opinion, in this policy. You don't have it. The last thing I'm going to talk about is their agency force. Now, this is going to get me killed, specifically because their largest agency force is really active on YouTube. And I actually get a lot of views from their agency force. But I don't care. I'm gonna burn the bridge because I think it needs to be done. So their biggest, or one of their biggest distributors, is a company or a group of agents called WFG, World Financial Group. In my experience, WFG reps are some of the most, if not the most, uneducated insurance and annuity reps in the entire industry. And I've seen hundreds and hundreds of WFG reps. My experience has been they know how to sell the products, but they don't know how to design them. They almost is the key word. They almost exclusively sell Transamerica. And the reason that they almost exclusively sell Transamerica is because Transamerica pays WFG more than the other carriers do. So that seems like a little bit of a conflict of interest in my mind. So WFG gets paid more by Transamerica. Therefore, WFG reps write almost exclusively Transamerica. They know how to sell the products, but they don't know how to design the products. And most oftentimes, the products are sold in a way that generates the maximum commission for the WFG rep. It's not designed to accumulate the maximum amount of cash for the client, which is how it should be done. It's sold to generate a big commission. And it's not necessarily that every single WFG rep is bad. I'm sure there are some good ones. I just haven't seen any of them. So that's probably going to get me killed on YouTube, but I don't really care. It's true in my experience. The WFG agency force sells this product a lot. They push it a lot. It's a bad product. It's not anywhere near the top 5, not anywhere near the top 5. And there are much better options out there. Now, if you have a Transamerica product or something similar and you want me to take a look at it, if you want a policy review, you can contact me a couple ways. You can send me an email directly at matt@leveragedwm.com, or you can go to my website, leveragedwm.com/contact us, and there's a contact form on there. I'm happy to review any policy that you might have or any policy that's being proposed to you. I'm not necessarily interested in arguing with a bunch of WFG reps. It's a waste of my time. But I hope that this video was helpful to you. I'm going to do a lot more policy reviews starting in 2019 because I think it's sorely needed. And drop me a comment below. Let me know if I missed anything. Make sure to like and subscribe so you can stay up to date on all my upcoming product reviews. And I look forward to talking to you soon.